What is going on, guys? Welcome back to another market update. As usual, let's get straight to the charts. We have a lot of things to discuss, guys, and things are getting really exciting here. So recently we got this rejection off the 80k level as expected. This was a major resistance area. And now we finally got our initial capitulation at least. And we have reached a very important level, which I will discuss with you very soon. As you can see, so far we've had this liquidity grab here just below the previous bottom, because even though, we technically put in a lower low at roughly 59,000, it was essentially the same level as the previous low back in February. But what is not the same is where we are in relation to the power law. As you can see, look how beautiful this is. We got support right on top of this bottom power law support at roughly 59,000. We have two little wicks below it by a few dollars. And so far, we've had a very nice bounce here. So the important question, does this mean that the bottom is in? It may very well be in. Or worst case scenario, in my opinion, is that we get one more small blip below the power law support, as we've actually had a few times in the previous cycles. I think the worst drawdown was like 23% below the bottom power law support, but obviously that was a very short-term event. And in this cycle, we also had a small drop below it. So honestly, you can't go wrong buying here. When looking at the power law fitting, you can see that we pierced below this magenta line here and are now having a small recovery. Again, worst case scenario, we have some sort of small blip below the bottom power law support and maybe end up reaching this purple line at worst. Not financial advice, obviously, but I'm pleading you guys not to be the guy who waits for an exact particular level, because you may not ever get that level. What we know, historically speaking, is that the next bottom should happen before the close of this yearly candle. As you can see, this chart beautifully divides Bitcoin's market cycles into bull and bear years. The tops are marked by these red lines here. Typically speaking, the bear market lasts for roughly 1 year, but it doesn't guarantee that the bottom will be exactly in November, exactly in December. It could happen earlier, especially considering that this top was also a little bit early, historically speaking. I'm already heavily accumulating, and I will tell you a little bit more about my strategy later on. But for now, let's look at some other charts and indicators as well. Let's just very briefly look at some of the economic charts. As you can see, the unemployment rate is at 4.3 right now, so things are relatively stable. Nothing catastrophic just yet. When you look at the federal funds rate, you can see that we're coming down very slowly here. We're going to have a new Fed meeting soon. Typically speaking, Bitcoin does dump after these meetings, so you're going to have to be a little bit careful about that. Bitfinex longs are reaching very high levels. We're currently at 90 or so. Historically speaking, the tops have been near 100 or so. And this is exactly where you should have been accumulating in the previous market cycle. Obviously, you cannot assume that we have to go to 100 or anything like that, but this does at least show that we are getting close to some really good buying opportunities here. Next, let's see what Minotaur is up to. And guys, I have something very exciting to talk about, but first let's look at how the algo has been doing lately. As you can see, this is the long and short hedge algo, which hedges shorts and also has a very tight stop loss. Psychologically, this is exactly what you need in a bear market, because even though we have other versions of the algo that just DCA longs, sometimes you can get stuck in a long-term trade if the downtrend is very aggressive. And this algo fixes all of that. That's the beauty of it. Both algos are great. They can work great in certain market conditions. But psychologically, it is much better to stomach maybe maximum a few small losses a year when you have a massive crash, and then continue trading once we build a base again, like we are over here. So this particular algo has a 1% take profit, which is ideal in these types of market conditions, because when you don't have that much upward volatility, it can take a little bit of time before you finally exit your trade. But 1% moves to the upside happen all the time. As you can see, we're just continuously entering and exiting trades here, capturing all of this volatility, compounding our existing Bitcoin, just adding it to the portfolio and essentially mining it for free. So this is an exact replica of what my own bot has been doing, with just the order sizes adjusted for privacy reasons. I fully migrated over to the hedge bot now that we have CoinM available as well, because obviously I like to trade with Bitcoin collateral. All the other versions of the Minotaur algo are still available. For example, we have the power law algo that is able to intelligently adjust its order sizes based on how far we are from the power law. But this one is simply a hedge bot, but we still always use the power law as a point of reference when creating the order sizes, for example. This is another one of our bots that I've been running in the background so you can compare the trading behavior. So this is the older version of the bot that is long only. And this one can get into longer trades, as you can see. So we were stuck in a position for roughly 1 month, but now we finally exited and made a massive profit. Now comes the really exciting part, guys, because honestly, I couldn't believe my eyes when I first saw this. But right now, there's a 7-day free trial. You can test out the bot, after which you can pay $49 a week to continue testing it further. And if you like the system, you can also purchase it at any point. But this is essentially a no strings attached offer. It's very low ticket. You can test it out. If you like it, you can continue using it. If not, you can always stop. I will personally help you set up your bot. You can join one of our free daily group calls, or you can schedule a one-on-one call just so we can go over your situation for an hour. That's also very affordable. That's roughly $50 an hour or so. And once your bot is set up, you can just let it run and see if you like it. So use the link in the description to get the offer, and I'll be happy to set up your bots, guys. All right, let's continue with the precious metals. As you can see, silver is deep into its bear market. We had a very nasty blow off top over here as predicted, followed by a sharp sell-off. And then we had our complacency phase, and now we're in some later phase of the typical boom-bust cycle. We almost put in a lower low, but not quite. We just wicked just above the previous low, and now we're recovering. Gold is not doing so good either. As you can see, we just recently put in a lower low. Now we're having a bounce, but because gold is less volatile, the ratio of Bitcoin versus gold is still favoring gold as of right now, obviously. Here's the Bitcoin to gold chart. As you can see, this is where we actually rotated out of precious metals. That was still a good decision in hindsight, but Bitcoin has actually been losing some ground against gold lately. So we're still getting some really good value over here if you're interested in rotating out of precious metals. The S&P has been correcting a bit lately, as you can see, but nothing major. We are still in a raging bull market as of right now, unless this was the blow off top, which will eventually come. We've been rallying due to the AI mania and everything else, but it will eventually burst. And maybe we will get some affordable RAM and SSDs. But for now, Bitcoin is obviously the underdog. But at some point, capital will have to rotate back into Bitcoin again. When looking at the crypto fear and greed index, you can see that we are in extreme fear right now. But the interesting thing is that this recent lower low didn't actually put in a lower low in the crypto fear and greed index. It was actually a higher low. So maybe this will actually build up some sort of divergence here. People are getting maybe just a little bit less fearful as the price keeps dropping, because the drops haven't been that aggressive. Obviously, the crash itself was large, but in terms of the consecutive lower bottoms, we have barely moved below the February lows. All right, let's get back to Bitcoin. As you can see, when compared to other market cycles, this has been pretty shallow so far. I kind of drew the worst case scenario in my opinion over here, which would be like a 60% drop for this market cycle, unless the bottom is already in, which is absolutely possible because that's where the power law support is. So it could be that this is kind of like an outlier market cycle where the actual drop is only like 53%. It's absolutely possible. But as you can see in the previous cycles, we had like an 86% drop, then an 84%, then a 77% drop. So we'll have to see how large the drop of this cycle will be. But so far, I mean, we are already in amazing value territory. We're not going to get like an 85% crash this cycle, in my opinion. That would look absolutely ridiculous if you look at these charts. Next, let's look at the moving averages. And as you can see, we have a massive confluence of support because we have the 200-week moving average lining up with the bottom power law support. So it's no wonder that we're getting a very nice bounce right now. The only question is whether we will be able to maintain above this and continue rallying higher, or will we have some sort of shakeout? As you can see in the previous market cycle, we did actually drop quite significantly below the 200-week moving average, so that is not impossible. But historically, you can never go wrong buying at or near the 200-week moving average. Okay, let's talk strategy, and I don't mean MicroStrategy. So when we were close to the top, Bitcoin-backed loans were all the rage. I didn't really buy into that narrative because I knew the risks, but now things are getting a whole lot more interesting. And this is the part where I have to keep repeating that this is not financial advice. But if you're able to, getting a traditional loan can still be a better idea because it's a lot safer. The bank won't check how much your Bitcoin is currently worth. Even if Bitcoin were to drop to, let's say, 55,000, 50,000, you're not going to get a margin call or anything like that. Probably it's going to be secured by some other more stable asset. But if you're not able to get a traditional loan, there are still lots of options available. So Bitcoin-backed loans are very popular. Typically speaking, you can get like 40 to 50% of the total collateral value. And yeah, right now it's a whole lot safer to use a product like this compared to when we were back here. And paradoxically, this is also the place where everybody is too scared to make use of such opportunities because we've been through a devastating bear market. Personally, I actually prefer using extremely low leverage on an exchange. So this is currently my long ladder on BitGet. As you can see, I entered the first position at roughly $62,000 because that's kind of where the previous low was, and I knew that this was a great opportunity buying essentially just above the bottom power law support. Now, I also placed some other orders below that level, as you can see. I know that leverage rings alarm bells, but hear me out. Just for a moment, forget everything you know about leverage trading, because most people you see on YouTube will be trading with 10, 20x leverage. But in this situation, we will be doing something completely different. So let's say we open up a 1x leveraged long position with Bitcoin collateral. So currently my position is at like 62,000. I have a ladder all the way to like 48. So the average would be like roughly, let's say $55,000 for the position. So a 50% drop from that point would actually take us just about to $27,000, which is pretty ridiculous. So that's where our liquidation price would be with 1x leverage with Bitcoin collateral on a futures exchange. Because for every dollar you lose in collateral value, you also lose $1 with the position. So what would this drop mean in the grand scheme of things? This would mean that we would have to drop a total of 78% from the top, which is roughly the magnitude of the drop in the previous cycle. And obviously this would be absolutely catastrophic and completely unrealistic. But we're not done yet. I actually decided to use 0.5x leverage in this situation. So with Bitcoin collateral, this would mean that we would have to drop 75% from our average entry. Where would this take us? Even more. Okay, we stopped here. So this would take us below the previous bear market bottom. Okay, and let's see what would this mean. So from the top, we would actually have to drop 89%. So that's roughly the magnitude of the crash in this market cycle. Again, if you believe that's likely, okay, but personally I don't. I'll be real with you guys, if we were to drop 89%, I wouldn't be making these videos anymore. I'd be serving fries at a McDonald's. So I'm not betting on any particular level. My only bet is that this low will be higher than the previous low. You might think that it's impossible to make any significant money with this strategy, but you'd be surprised how much liquidity you can actually unlock with this strategy. If you already have all of your liquidity locked in Bitcoin and have nothing else to trade with, you could potentially unlock tens, if not hundreds of thousands of dollars of liquidity with a relatively modest portfolio. And I get it, spot trading is always going to be way safer, especially if you keep your funds on a hardware wallet. but this is an option if you're able to stomach the exchange risk over the course of potentially a few years. And why am I saying a few years? Because that's where Bitcoin's price will at least double according to the bottom power law support. So in a couple years time, the actual minimum value of Bitcoin would be approaching $110,000, $120,000. We are also accounting for the funding fees, so prepare to eat 10% a year or so for a total of 20%. So personally, I'm utilizing a lot of these different strategies. I have a HODL section in my portfolio. I have an algorithmic section for Minotaur. Then I also have this manual trading section. And then I also have an investing section for once in a cycle buys and sells. All right, I've been rambling long enough. It looks like Bitcoin is having a very nice pump right now. And make sure to make use of that amazing Minotaur opportunity right now. And I'm going to be seeing you guys soon.